Robinhood is rapidly becoming one of my biggest holdings, and I think the company has a ton of momentum that is going to last for potentially decades. That is why I think that Robinhood is going to beat the market. Now, is the stock going to beat the market over the next month or two? Given the really high valuation, there's a lot of risk short term. But as a long-term investor, somebody's thinking about where's the differentiation that Robinhood has over competitors over the next 10, 20 years. I think the company has a ton going for it. If there is a pullback in the market, this is one I will likely be buying aggressively. So let's go to why investors should like Robinhood today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with some of the trends that the company has from an operating perspective. And the first is the amount of deposits coming into Robinhood. I'm going to show this on a trailing 12-month basis. So this goes all the way back to when the company came public. And during the pandemic, $36.5 billion in the trailing 12 months as of June 2021. So that was getting towards the peak of the market. Then those deposits started to decline down to about 16, 17 billion per quarter in 2022 and early 2023. But then things really started to pick up. In the most recent 2 quarters, the company has brought in 13.2 billion and then 10 billion in the third quarter of 2024. We don't have the full numbers for the fourth quarter of 2024, but there was momentum in the back quarter of the year as well. So more deposits coming onto the Robinhood platform means that the company can generate more revenue from payment for order flow, can get more customers into some of their financial services products like their credit card, like Robinhood Gold. That's what ultimately differentiates the company. And that's how you get to this financial performance. And this shows the company's revenue growth and then net income of 525 million over the past 12 months. Now, this is where shares look really expensive. If you're looking at Robinhood as a company that you need to value based on similar valuation metrics for brokerages, for banks, this is a pretty expensive multiple. As I'm recording, the price to book value is 5.6, trailing price to earnings multiple 78. That's extremely high. Even on a forward basis, that price to earnings multiple is 34. So this is not a cheap stock. That's what I mean early on, where the stock could be extremely volatile, but it's these long-term trends that I'm really keeping an eye on. And some of these long-term trends are just too big to ignore and too important to ignore. Remember back to the pandemic, Robinhood was really a YOLO trading platform. Most of their customers only had a few $1,000s in their account. That's not a great place to build a business. That's why the business dropped as much as it did in 2022 and early 2023. But look at the growth that we've seen in retirement over the past couple of years. This goes back to Q1 2023. And then this is the November number. There are now 1 million retirement accounts on Robinhood. The assets under custody, I believe, was up 9x in the past year, but now over $12 billion in assets under custody for retirement. If that continues to grow, if Robinhood becomes a go-to place to invest for your retirement for people who are in their 20s or in their 30s, that is a long runway of revenue for Robinhood to generate. And as that user base, particularly in the US, becomes more mature, uses kind of more mature products like retirement accounts, the company can expand internationally. So there's really 2 layers to the next leg of growth for Robinhood. One is going to be international growth. You can see some of the areas where the Robinhood wallet has been downloaded. They're applying for licenses to carry crypto. They're launching brokerages in Asia. So these are all areas of potential growth for Robinhood. Most of their business still in the US, but they could really expand this around the world. That's the advantage of being a digital business. You don't have to go out and build a whole bunch of new products, build a whole bunch of branches in physical locations. You can just launch your digital products and services. The other thing you can do is rapidly move into new spaces. This is their list of current offerings. And there's a bunch of things missing here, especially as you get to customers that are using things like retirement accounts and joint accounts. You want to be able to buy mutual funds. You want to be able to buy fixed income, treasuries, do foreign exchange. These are a couple of the big ones that I've kept my eye on. 529 accounts, custodial accounts. This is going to bring in families into the Robinhood platform, allow them to build more and more products and services, and increase that wallet share. That's really ultimately the goal for Robinhood, is to increase wallet share with their customers, particularly those younger customers that are starting to move into the point where they need to have custodial accounts and 529 accounts. That's something that I would potentially move my kids to, but can't quite do that yet. Same thing with employee sponsored accounts. This is all white space that Robinhood can grow into. So you have tremendous momentum with the existing business, But then you add in the international growth and then the product growth, and you have a long runway of growth ahead for Robinhood. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. And then there are two things that I want to add on just the broad growth trends for Robinhood. Talked about some of the specifics, some of the momentum that business has, but what the company is trying to do is really grow up with the generation of investors that it is serving. So primarily, that is millennials. 50% of the company's customers is millennials. So that's going to be people at most in their mid-40s, but likely younger than that. So you have 20, 30, 40, 50 years of a potential relationship with those customers. Gen Z, that's going to be even longer. You have a very, very small amount of customers who are in the baby boom silent generation or in Gen X. So most of your revenue is going to be in these customers that are not only going to be increasing their earning power, you see that income number down here, but also going to be moving into more account types. They're going to be inheriting money from baby boomers, from Gen X eventually. So the assets just in this cohort of customers is going to go up rapidly over time. That's how you're going to see this number, the average customer assets, October 2024, that was just $6,500. We're going to see that go up by at least an order of magnitude, I would expect, over the next 10 to 15 years. All of that is going to be tailwinds for Robinhood. And I think the final thing that can't be understated is this is a digital first company. If you are mobile native, so you're a younger person who is used to using a mobile phone, that's where you do a lot of your banking. It's where you're communicating with other people. It is just natural that your finances are going to be on your phone as well. That's why having a great app like Robinhood is a huge differentiator for them. If you've used any of the other legacy brokerage apps, they're just simply not as easy to use as Robinhood is, and yet you get all the information that you need from Robinhood. What those companies have done is what traditional legacy companies typically do. They take what they're used to selling on a desktop and they try to shove it into a mobile device. Robinhood basically went the other direction. They started with the mobile device and then they moved to the desktop. I think that's going to be a huge advantage for them long term. Those usability advantages are hard to quantify, but when you have them, when you have a popular app like Robinhood does, that's going to continue to attract customers. So expensive stock. I don't want to look past that. This is a company that could absolutely pull back 20, 30, 40, 50%. But in the case of any weakness, that's when I will be buying shares of Robinhood. But like I said, as one of the biggest holdings in my portfolio, this is one that I'm going to ride and I think will beat the market over the next 10 to 20 years. So if you have a long-term investment horizon, this is going to be one of the top performers, I think, in the financial services space. But let me know what you think about Robinhood. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.